Join the conversation
with Richard Dean, Brandy Scott and Tom Urquhart.
You're listening to the Business Breakfast on Dubai Eye on One.
And digging into one of our top headlines this morning, Dubai property prices have seen their highest monthly price appreciation in 6 months, according to a new Property Monitor report, which is set to be released later today. However, mortgage transactions are at a 20-year low. How does that all fit together? Very pleased to be speaking now to Property Monitor COO Zhann Jochinke. Zhann, good morning. It's lovely to speak to you.
Morning, Brandy. Happy Friday.
Happy Friday indeed. Let's start by talking price rises. I thought things were starting to taper off, Zhann.
They were. Since sort of mid last year, we started to see the monthly price appreciation start to taper down, slow down, which is exactly what we wanted to see. And then we had a down month, and then we had a small up month. And then last month, the index has bounced up almost 1.5%. Nothing to be concerned about. We do expect fluctuations plus or minus over the coming months as the market sort of goes through that next phase from sort of growth, from recovery into the growth phase. What we don't want to see is significant price increases. Say if we see a monthly increase of 2 or 3% month on month, that's where we start to get into some dangerous territory. So that's price increases based on a dynamic price index. So it's the index that tracks price increases and decreases over time. What you mentioned before is we're at record transaction numbers for January as well. Over 5,700 transactions for the month of January, which is the all-time high for January. It builds on the back of strong transaction growth coming out of Q4 last year. What's different about this now from earlier is that the dynamics of the market have changed. What's transacting has changed. We're coming out of the pandemic, the lockdown phases. It was a big switch to ready properties, to resale properties, to villas and townhouses. Villas and townhouses still remain popular, but now it's switched to developer sales, off-plan sales, those initial sales that have driven the market for years before. We're starting to see a reversion back to that happening now.
What is that purely because people aren't thinking pandemically? As you say, a year ago, everyone wanted a property that they could move into tomorrow. Are people less worried about isolating, or are they not working from home as much? What are you drawing from this?
I don't think it's either of those. I think they're both, those are still major concerns. I think the problem is the lack of properties to move into, a ready completed property. There's just not enough out there. And there's the ones that are out there aren't necessarily priced where buyers want to buy. Prices went up so quickly in some of those villa and townhouse communities that buyers have stopped chasing. You're not seeing them come to meet seller demands. So if you want a villa or a townhouse, now you're kind of left with the fact, well, I can't get one on the resale market or the completed market that's in my price point. So what do you go to? Well, developers have picked up on this opportunity. They're launching a load of new projects that cater to this demand, and buyers are following it.
It's an interesting point. Quickly, Zhann, when we hear about this shortage of property and you drive past, Damac, Dubai Hills, you think, what shortage of property? Is it shortage of property at a price that people are willing to pay for it? Because that's quite the difference.
Yep, nail on the head, Brandy. It's exactly what it's got to now. Like a personal scenario, villa I used to live into, it went up over 1.2 million in the space of 12 months. Now prices are at that. People are asking that. They're not biting at something that's 1.3, 1.4 above that price that was a year ago.
At the same time as we've got this price spike and, as you say, the best ever January for transactions, mortgage transactions are at a 20-month low. How does that fit in the picture, particularly since we know we've got 3, maybe 4 rate hikes coming?
So what we should expect right now is people jumping on that. I got great low interest rates. Let's get on it now. We know that there's several rate increases coming. The reason I think it's not happening, it goes back to what I was just saying before. Properties that you can get a mortgage on need to be completed. Off-plan properties, you're not getting one. So if you can't buy a property, you can't mortgage a property. So there's just that lack of inventory that's mortgageable. Refinances, people are still taking advantage of that. They're refinancing or remortgaging their property before rates go up. But those initial purchase money mortgages are really down. And it's not just last month. It's been a trend that's been happening probably since January 2021.
Well, let us ask you about our topic for the day before we let you go, Zhann. We've got about 2 minutes left with you, and that is fractional ownership. The first fractional title deeds are being issued here in Dubai. What does it mean for the market?
Look, I think it's another good thing to come into the market. There's other forms of fractional ownership already there through people like Smart Crowd and Stake, where you're taking a smaller piece of a property, but more through a fund type environment. And as Richard was mentioning before, REITs are another version of it. This version coming out, there's one part that I think people should look at. It's not you and your mates go out and buy a villa or an apartment anywhere you want. Land Department is governing where these projects can be. I believe they're probably going to all be in hotel apartments. So you've got, coming on the show later on, World of Wonders with SLS. I think they were the ones that were in the pilot program with Land Department. I think it'll be good. It'll open up the ability to get onto that investment ladder for some people, where you're only taking on up to, say, a fourth of the property, up to a whole of the property, so you can split that initial investment. Would it be my preferred investment vehicle when there's other ones out there? Probably not.
Do you think the market will go for it? Do you think people will want to be involved with it?
We're already seeing it. I mean, SLS, we're in the pilot program. We saw some transactions come through. People will jump onto it. I think it's good for the hotel apartment market, where the management of the unit is taken on by an experienced operator. Land Departments put some good things in place with it. They're also going to stand to benefit from it as well. Transfer fees at the 4% that we pay upon transfer of a title deed typically happens at the start of the transaction and then whenever that property is resold. So there's that, say a 10-year investor is paying it once and then someone else is paying it 10 years later. With fractional, you could have multiple owners. So say you've got one investor that's long-term, so that 4% on their portions being paid down the road. And then the other portions could trade multiple times within that same period. So there's more revenue that goes into the government coffers, which is also great.
And Zhann Jochinke is the Property Monitor COO speaking to us this morning. Thank you for your time. Ahead of the new Property Monitor report that's going to be released a little bit later today. Let us know your thoughts on fractional ownership. Is it something that you would be interested in? What misgivings might you have? Why do you think it might be a good thing for your portfolio? 4001. Use the app.
2 days to go until Gulfood, the world's most exciting food business event. Register now at gulfood.com.
Keeping you updated.
Here's Richard Dean, Brandy Scott and Tom Urquhart.
You're listening to the Business Breakfast on Dubai Eye on 1.